What causes inflation to remain as high in specific countries? Inflation is a hot topic right now, with many people asking why it continues to rise in certain countries. Just this week, reports have surfaced highlighting persistent inflationary pressures. If you are curious about what is driving these trends, you are not alone. Many are searching for answers as they feel the impact on their wallets. Several macroeconomic factors contribute to high inflation in specific countries. One major factor is tariffs and trade policies. Increased tariffs on imports raise costs for businesses. Often, these costs are passed on to consumers, leading to higher prices. In the United States, tariffs have been estimated to add between 0.5 to 1.5 percentage points to annual inflation, depending on the rate applied. Such trade barriers create ongoing upward pressure on prices. Another important factor is fiscal policy and government spending. When governments implement large spending packages, they stimulate demand in the economy. If demand outpaces supply, prices rise, contributing to sustained inflation. Recent fiscal measures in the United States are expected to keep inflation elevated, even with other moderating factors in play. Supply chain disruptions also play a significant role. Geopolitical events, especially those affecting energy supplies, can raise commodity prices like oil. For example, instability in the Middle East has raised the baseline for oil prices, which influences overall inflation levels. Labor market conditions are another critical aspect. Tight labor markets with low unemployment can lead to wage increases. Businesses may pass these wage increases onto consumers as higher prices. In some economies, low unemployment continues to exert upward pressure on prices. Additionally, currency depreciation can impact inflation. A weaker domestic currency makes imported goods more expensive. The recent weakness of the United States dollar has been noted as a factor pushing inflation higher by increasing the cost of imports. Sector-specific price pressures can also affect inflation rates. Certain sectors, like housing, can experience price increases that disproportionately impact overall inflation measures. Rising shelter costs have been a significant driver of core inflation in various economies. Lastly, consumer demand and spending patterns are vital. Strong consumer spending, supported by rising incomes, can sustain demand-pull inflation. Even with some economic slowdowns, stable or increasing consumer spending can keep inflation elevated. In summary, inflation remains high in specific countries due to a combination of trade-related cost increases, government spending boosting demand, supply-side constraints, labor market tightness, currency effects, and sectoral price pressures. These factors interact to maintain inflation above target levels, despite efforts by central banks to moderate it.